myself Vaibhav. In today's session of Visual Jforex, we will be starting afresh with the new indicator named Bull Power. And this is the indicator which we can utilize to see the trend. And in today's session, we will see how we can use this indicator block on the Visual Jforex board, which has been developed by the Dukascopy Bank SA to make our life easier. We can design and develop the algorithm in a very simple way. So I will be familiarizing you with how you can go ahead and build your own algorithm using this indicator bull power. So this is the indicator block. In earlier series, I had also done an introductory session on this indicator. So if you want to go into the details of how it is calculated and its technicalities, you can refer to that session. In today's session, the focus is going to be mainly on its application in real time. So we will see how we can design the algorithm using the various parameters which we can define. So this is the EURUSD chart on the hourly time frame, and I have plotted the bull power indicator at the bottom, so you can see. And as the name suggests, it gives you idea whether there is enough of bullish momentum in the underlying instrument, and whenever there is the momentum present on the bull side, we have these bull power output values above zero, and when it is not much of an bullish trend, rather the bears are having their time in the sun, we will see that bull power output values are in negative. So you can use this zero level as a key marker. Above it, the bulls are in charge. Below it, the bulls are taking rest, you can say. And for this session, what we will do, we will look for the momentum whenever we see that bull power output value doubles while being on the buy side, that is above zero. We will be looking to initiate the trade. So the idea is fairly simple. So the buy trade will happen whenever we see that bull power output value has doubled compared to the prior output value, and it is above zero. So that will be the precondition for the execution of the buy trade, and vice versa for the sell trade. We will look for the bull power values when the values are below zero, and here also the condition is going to be the same, that it should double, and of course this is going to go down. So whenever that happens, we will be looking for the initiation of the sell trade. I hope you got the idea, and it is fairly simple to understand. And then other aspects come in, that when to execute the order. So what I think is going to be optimum level is to go for the pending open order rather than going for the market open, and that way we can allow more time for the price action to settle, and whenever we see that the risk is going to be minimum, we can look for the entry in that trade. So this is how it is going to be. Now let us go back to the Visual Jforex board. This is the bull power indicator block. Default instrument will remain as it is. This will be changed to hourly, and here shift value will be 1. So this is going to be one of the block. Now before that, we will have to start with the instrument subscription first, and I will bring in the if else blocks, and we will use on candle as our start point. This is the candle instrument and it should match the default instrument. Okay, default instrument is EURUSD. Again, we bring in the candle instrument. First input equals to second input, and here we will have to find the EURUSD. Okay, you got this. Then another condition is going to be that there should not be any pending or open position on the account, so the position amount will be defined at 0. And after that only the willpower indicator will get into picture. Okay, again indicator. Here also parameters need to be changed. It will become hourly. Shift is going to be 2. Time period remains 13. And then the focus is going to shift to historical candles. So we have to take info components. This will be of hourly time frame as well. Look back period of 1. And to pinpoint the entry, I think to optimize the entry, we will also have to rely on one more historical candle block with look back period of 2. So I will add additional one. Shift will be 2. And then to pinpoint the exact entry point, we will be relying on the 10-second blocks of get historical candle with look back period of 1 and 2 respectively. This will be changed to 10 seconds and this also 10 seconds. Okay. Now to look at the price action prior to the execution of the trade, and also to define this condition that the last output of the bull power indicator should be twice of the prior hour's bull power. So we will have to carry out some calculations. So I will bring in the calculation expression block. And yeah, oops, this should be power 17. Okay, and it needs to be multiplied by a new variable. I'll create a new variable, and it will be named twice full power condition. And this will be A1 into A2. And we'll name it minimum full power condition. And as I said, to pinpoint the entries, we also have to consider the comparison between the closing levels of these two hourly historical candles. And I think if we look at the chart also, it will be better to go for the order execution whenever we see that some correction has happened from the last hourly close. And to what extent we should be looking at the correction, I think that is going to depend on the immediate price action. If we have seen sharp increase, in that case, as is the case here, let us see what happened. There is not much of a correction, but still we can use the high and the lowest point of last hourly candle and place the order say 30% or 40% below the high or closing value. We can do both ways, and if we use that, our stop loss will become lot lower, lot less. And yeah, we will see what is the actual difference, and then accordingly we can apply certain percentages to it. So we will be considering candle 18's closing and opening values instead of high and low, as that can be quite volatile. And for the buy trade, the closing value should be higher than the opening value. So this difference will have to be positive. We will be adding additional condition that the closing should be higher than the open whenever we will start defining the condition for the buy trade. As of now, we simply carry out this subtraction, A1 minus A2, and this result is going to help us define the point of execution for the buy trade. So this will be positive candle difference, and then we will take 40% of it of I have to first define the variable, and we will name it FPC. Start value will be 0.4, and this will be A1 into A2. So this is the price difference which we will subtract from the last tick price whenever we will be defining the entry point for the buy trade. The minimum buy execution requirement. Okay, so here we have defined this price action difference to make sure that we are considering the volatility, and depending on that we are going to place the pending order. So with this I will be wrapping up the session. In next session we will be using this calculated difference, and with certain additional conditions we will be defining the execution for the buy trade, and after that of course it will be the turn now defining of the conditions for the execution of the sell trade. So with that I am signing off. Have a fabulous time ahead. See you next time. Till then, goodbye.